I am DK Sinha and you are watching DK Global Market Insights. Before we begin, an important disclaimer. Market returns are never guaranteed, but when we do the research and analysis, then we do get an edge in the market, but risk management cannot be ignored. In today's weekly outlook, we will look at how the major US indices performed, what the global markets did, what is happening with volatility, fear and greed, precious metals, and most important, macro updates from the US. We will also look at the technical charts of S&P 500, Nasdaq 100 and Russell 2000, which is our market of the week. This weekly market outlook premieres every Saturday at 7:30 p.m. Eastern Time. Let's begin. US market this week. This was a very strong week for the US markets. The S&P 500 moved up by 3.73%, showing broad market strength across the sectors. The Nasdaq 100 performed even better and moved up by 4.93%, mainly supported by technology and growth stocks. The Dow Jones also joined the rally and gained 3.18%, and Russell 2000, which represents small cap companies, moved up by massive 5.19%, making it the strongest performer of the week. This kind of performance tells us that investors were willing to take more risk, with confidence increased across large caps as well as small cap stocks. Global markets this week. Global markets also moved higher this week. The UK's FTSE 100 gained 1.9%. Germany's DAX index rose 3.23%, showing a strong momentum in the Europe. The Japan Nikkei 225 moved up 3.35%, continuing its positive trend. In India, Nifty 50 gained 0.52% as the market remained in consolidation phase, and Hong Kong's Hang Seng index rose 2.53%, supported by positive sentiment across Asia. Overall, global markets were largely positive, which helps reinforce the strength we are seeing in the US markets. Market of the week. This week, the Russell 2000 is our market of the week. It moved up by 5.19%, which is a very strong performance for small cap companies. When small cap stocks outperform, it usually suggests that investors are becoming more confident about the broader economy. This is because small cap companies depend heavily on domestic business conditions. Their strength indicates that the market is seeing improvement beyond large cap leaders. This is positive sign for the overall health of the US stock market. Precious metals this week. Let us now look at the precious metals. Gold, which trades as XAU USD, moved up by 3.71% this week. Silver, which trades as XAG USD, performed even better and moved up by massive 12.74%. Silver rising much faster than gold often indicates that the investors are shifting some of their focus towards industrial demand as well. At the same time, the rise in the gold suggests that some investors are continuing to hedge against uncertainty. So we are seeing a combination of risk taking in equities and protective buying in metals. Sentiment and volatility update. Let us first talk about the VIX, that is volatility index. Volatility fell sharply this week. The VIX closed at 16.35, which is 30% drop for the week. This means the market is becoming more stable and traders are less fearful. VIX is not yet at the extreme low zone, but it is clearly moving down, which supports a positive trend for the equities. Fear and greed index is now at 24, which is still in the extreme fear zone. Last week it was at 18. 1 month ago it was at 39. This shows that even though the markets are going up, the overall sentiment among investors is still fearful. In many cases, this is actually a positive sign because the markets often rise when people are still cautious. This is called a wall of worry and market is climbing it. Market momentum. The S&P 500 is trading above its 125-day moving average, and that keeps the momentum in the neutral to improving zone. This suggests that medium term trend is strengthening again after some corrective phase. The 5-day put call ratio is around 0.71, which is considered a sign of extreme fear. What does it mean? This means more traders were buying protection through put options. When the markets rise and the put call ratio stays high, it often means the rally is healthy and not driven by excessive greed. Macro updates. PPI, Producer Price Index. In September, the Producer Price Index rose by 0.3%, which was exactly in line with the expectations. However, when we exclude food and energy, the number was only 0.1%, which was below expected level of 0.2%. This tells us that inflation pressures are cooling, which is overall good for the market. Retail sales rose by 0.2%, which was highly below expectations. But retail sales, excluding automobiles, rose 0.3%, which was in line with the expectations. So the consumer remains stable, and this supports the idea of soft landing. The 10-year US Treasury yield stayed almost unchanged at around 3.99%. The 30-year bond yield moved slightly lower and 2-year yield moved slightly higher. This shows that the bond market is waiting for more clarity from Federal Reserve. Stable yields generally help equity markets because they reduce uncertainty. Technical charts. Now that we have looked at the fundamentals, global markets, sentiment indicators and macro data, let us switch to the charts for technical analysis. This is the weekly price chart of S&P 500 index, which finally closed at 6,849.09. Can you see the price correction over here? Price took support at EMA 21, which indicated that EMA 21 is acting as dynamic support. And what is the candle of this particular week? Is the one white soldier kind of candlestick pattern, nearly resembling to Morobuzo, which is a strong price action in this week in the US stock market. If we draw like this, it's a breakout of a bullish flag as well. When we refer to the daily price chart, this is the area earlier also it has taken support from where it has bounced back. Now there could be a immediate resistance or supply area in a zone of 6,870 to 6,900. You can see the multiple price rejection. But once this supply area is taken out, it will be good if price consolidates in this area before it gives a breakout. Then there will be breakout of this very important range, and there will be upside momentum developing in S&P 500 index. Where are the support or demand area? There is an existence of a gap over here at 6,776, which is the immediate support. However, this area where earlier prices taken support, and there was a breakout over here of EMA 55 at 6,600 is the very important, little stronger support than the support of the gap. What happens if the price takes out this supply area? Let us project by using the Fibonacci expansion tool. Then this range breakout may go up to 61.8% expansion level, which comes at around 7,127. Now this is the price chart of Nasdaq 100, which finally closed at 25,434.89. Here too the price action is quite similar. This correction, price took support at EMA 21, which had a little confluence of VWMA 21 as well. And what kind of candlestick pattern is this? This is a one white soldier candlestick pattern, again looking like Morobuzo. If you look at the daily price chart, this area where earlier multiple time it got rejected, and hence there is a minor gap also at 25,069. So 25,000 becomes the psychological level also, which might act as a support. So 24,900 to 25,000 based on the price action remains to be the support area. Where is the supply area? Here the price has taken multiple resistance and there is an existence of a gap. So this window, that is 25,663 to 25,900, is the immediate supply area. Once this supply area is taken out, then it might develop upside momentum. And here too, it will be a breakout of a zone which was trading in this zone. So price may go upside. You can use the Fibonacci expansion tool to arrive at the projection. Now we are looking at the market of the week, Russell 2000. This index has closed at 2497.25. Can you see here the formation of a rounding pattern? There was a breakout, but there was no follow through and the price corrected and finally took support at EMA 21. So if we combine the 3 weeks candlestick pattern, it is looking like a bullish pin bar and then finally a one white soldier candlestick pattern. And if we combine 3 days candle and synthesize it, it is a morning star quite in proximity of the support area. This trend line is acting as a dynamic support. So once this has given a breakout of this level, so there is a breakout of a bullish flag also. This is the pole and this is a flag portion. If you arrive at the possible projection using the flag pattern, then the next level comes at 61.8%, which is at 2614, and 100% expansion falls at 2769. Conclusion. This week was strong across US and global markets. Volatility dropped sharply. Sentiment is still fearful. Momentum is improving and macro data is supportive. This combination helps the markets stay in the constructive zone. We will continue to track how sentiment shifts and how the major indices behave near important support area and resistance levels. Thank you for watching DK Global Market Insights. If you found this analysis helpful, please like the video and share it with others who follow the US markets. Let us keep learning and stay prepared for the week ahead.
Let's start with this stock market 101 video.
Good idea. It covers the basics.
Yeah.
Yes.
And then maybe the common mistakes one.
Yes.
Yeah.
So we avoid those.